Guys, let's go look at 3 AI stocks and see if they can potentially beat NVIDIA in the next 10 to 20 years. First stock, Palantir, a stock we've talked about a lot, a stock that everybody loved at $45 per share back in February of 2021. It fell to $5.83. Now it's back up, rip-roaring to go at $31. Mo, look at this. It is up 90% year to date.
Damn.
1 year is 105%, 6 months, 26%. This company's killing it. The key on Palantir is focus on their free cash flow versus their net income. Ironically, we've made videos about this. We've talked about their net income being a little manipulated, but their free cash flow is so good. I don't know why they do that. Mo, why'd you chuckle?
Well, we talk about the beating by a penny.
Beating by a penny, conveniently adding some assets to the books, conveniently to make them beat by the penny, etc.
And I'm pulling up TradingView right here just because I want to show like every single quarter. So if you just come down here to earnings, you can see beat by 1 cent. Go to the next quarter, beat by 0.003 cents.
Okay.
Beat by 0.004 cents. But they always just round it up to a penny. Beat by 1 cent. It's consistently beating by 1 penny.
You know, and it's funny because it's harder to manipulate free cash flow, and their free cash flow number is so good. They have $700 million in free cash from last year and a great balance sheet, $76 billion market cap, $73 billion enterprise value. But guys, this 1 year price of free cash flow is 110. Yeah, this company has a lot of growth potential. Let's even go look at what analysts are saying. 33 cents to 71 cents. But again, this is earnings, not free cash flow. And look at the revenue growth numbers, Mo. Basically 20% a year for the next 5 years, 6 years. So a lot of great growth potential with a lot of great cash flow, really good margin. What are they doing here? Look at this, 81% gross margin.
Yeah, it's huge.
Guys, that means for every dollar they add 81 cents of that to basically the bottom line to pay taxes and overhead. That's incredible.
Yeah.
That's absolutely incredible. As I look at it going, Alex Karp, he's so focused on the cokehead short sellers. You have a good business, it's growing. But at the end of the day, guys, when you have 100 times free cash flow at $76 billion market cap, I don't know, it can work out. And I'm sure, yeah, I mean, it worked out for Tesla and they just grew and grew and grew. But at some point, in the short run, stocks are a voting machine. In the long run, they're a weighing machine. So you got to ask the question here. So I guess the first question is, on Stock Analyzer tool, Mo, I did revenue growth for the next 10 years of 8, 16, and 24%. Okay. Remember, according to analysts, it was like 20% a year for the next 5 years. So I'm going a little bit lower there. Profit margin, I did 15, 25, and 35, and free cash flow of 20, 30, and 40. Okay. Now, I think in the next 10 years, their free profit margin and free cash flow should be pretty similar. Yeah. PE, I did 15, 20, and 25 because it's a fast-growing business. And by then, hopefully it's a high ROIC, justifies it, things like that. And I did my 9% return. What here do you disagree with?
I know you did the 9% return for the purpose of this, but
Yes.
That's the only thing I would disagree with.
So guys, I put that in there to get an intrinsic value of the company. Obviously, you as an investor has to put a higher number in there for margin of safety. So make sure you do that because the future is unknown. We don't know if these numbers are going to work out. Right. Hit the analyze button. Low price of 350 to 450, high price of 40 to 40. I mean, remember, my middle price used to be $5 or $7. Now it's 12 to 15. So it's getting better because the company is getting better. But at the end of the day, and by the way, this doesn't factor in the great balance sheet. So put 10% extra in there for that. I think for me, I'm like, okay, yes, the stock has gone up and it's done very well since going up. But again, 100 times free cash flow. It's a hard pill. But you know what the interesting part is? When it was $5 a share, it was 15 times free cash flow, essentially. Stock number 2, Qualys, another cybersecurity firm, another firm that has an all-time high of 206 back in December, hit a low recently of 122. Another firm with more free cash flow than earnings, which we love, and another firm with a great balance sheet. So guys, we're seeing a trend here. NVIDIA's got a great balance sheet. Palantir's got a great balance sheet. Qualys has a great balance sheet. These are things we like to see. Look at this, Mo. Look at this return on invested capital. 26% in the last 5 years, 30% year to date. I mean, in the last 12 months. It's pretty awesome, guys.
Look at their gross margin.
Gross margin, same as Palantir, 81.5%. Guys, this is phenomenal. But the difference here that I like, Mo, look at the market cap.
I know.
To me, guys, When you see a 4.75 billion, is it easier to go from 4.75 billion to 50 billion or 45 billion to 500 billion? That's my point. You're going to get much more growth out of a company like this. Mo, go to the analyst estimates.
Okay.
How many analysts are even covering the company?
24
Oh,
this
wow.
year.
Actually surprised by that.
Yeah, going down to 3 at the end of 2028.
I'm actually surprised by that.
Yeah.
Great return on equity, great return on assets, great growth right here. Mo, can you go to the cash flow? Let's go to the cash flow. Why don't we go to Mo's computer? Go to the cash flow statement.
Okay.
How much of the growth is acquisitions? Like how many acquisitions they have?
The last acquisition was 2018. It was only 13.6 million.
So guys,
so there's not a lot of.
This is right here is all
real.
Real natural growth. This is awesome. Now, guys, one of the things that's so great about Palantir and Qualys, if this is your first time hearing about them, we have extensive conversations in our community about these companies, and even the next one that we're going to go over. This is the whole point of the community. The point of the community is to have these conversations because not everybody in the community agrees with me on the Palantir beating by 1 penny conveniently every single time. But it was someone in the community who first pointed it out and did the deep digging to find that 1 cent conveniently and find the assets that attach to it. So if you've gone to everythingmoney.com to look at our community, you probably noticed that we only have a limited number of daily spots for our software and community. And the reason for that is the software as it exists today is perfectly built to include everything having to do with retirement, stocks, and real estate. But now we have 4 YouTube channels, and behind the scenes, we are working on some big changes as we continue to expand everything we're doing. These offers up here are going to get separated, and that current offer of everything is going away very soon. Now, you may remember, if you've been watching us for a while, that I built this software selfishly for myself so that my team and I could use it to constantly make better decisions in all aspects of my money. But it was the users who kept saying, how do I get that software? So we decided, let's go make it for everybody. Since then, the channel and community have grown immensely, and it's becoming less about me and more about how I can better serve you and the community members. Now, the good news is these changes haven't been made yet. So if you join today, you'll be grandfathered in for life. And all the data and all these tools that we've made and all of our future tools, you'll get to keep all of it and you'll stay in your pricing tier forever. This is the best deal we've ever offered. So if you're really serious about making better financial decisions, potentially increasing your returns, but more importantly, sleeping better at night, click on the link in the description below. Go to everythingmoney.com/signup to get access to everything. And I'm very confident it'll be the best decision you've made all year, but you got to do it before we make our changes. So for Qualys, Mo, have we done a stock analyzer on? Well, let's look at analyst estimates first.
Okay.
All right, 537 a share, growing to 942. Solid growth on EPS.
Good revenue growth.
Is it good revenue growth? Yeah. Double digits, 9 to 12%, 9 to 15%. That is awesome. So let's see if our analysis on Qualys. I just feel like I did it back in July, and I feel like, Mo, there's a lot of cybersecurity firms out there.
A lot of competition.
So, one of the things I do in the community is have a conversation and maybe split it up and say, okay, what's the differences between these firms? Or do you just buy a blanket of the firms that make sense and say, hey, a couple of them aren't going to do very well.
Make your own ETF, kind of.
Yeah. I don't know. These are ideas that I sit there and say, sometimes it's hard when you're trying to make a bet in a certain industry and there's a lot of good options out there. How do you really differentiate what the best options are? Right? So on my 10-year analysis, Mo, I did 5, 8, and 11% revenue growth.
Okay.
By the way, do you see this growing ROIC?
Massively.
17, 26, and 30.
Yep.
It's great. Profit margin, I did 25, 28, and 31. Might be a little aggressive, but I'm okay with that.
Okay.
Look at this free cash flow margin they have.
That's huge.
I did 40, 44, and 48.
Wow. Okay.
PE, 15, 18, and 21. And I put a lower one in there because I was like, it's not some brand that I go, got to have this.
I've never heard of it.
Yeah. And then I did my 9% desired return.
Okay.
Intrinsic value.
Let's see.
All right. I'm going to focus on free cash flow here. It's actually not bad. 110 in the low, 260 in the high, 170 in the middle. Based on the current price, 13% return.
Maybe you got something.
Maybe we have something here. The question is, at $4.5 billion, is this enough return to see this thing go to $40 billion?
Right.
To
me, I like this more than Palantir, especially because they've had profit for a long time.
And I like it more than NVIDIA. At a $3.2 trillion market cap, how do you make that 5x?
Right.
This one could easily 5x.
I like a price to free cash flow of 18.63, not 109. So
Guys,
I'm comparing the two.
Remember, the more attention a company gets, the less likely you're going to find value in there. On more attention on the positive. All the news on NVIDIA is positive, basically. Right? Guys, stock number 3, Fortinet, FTNT. Now, this is in between the two, but it's $59 billion market cap. Balance sheet, Mo, is not as good. It's $63 billion, but look at this cash flow. $1.6 billion a year. Last year, 1.3. So this difference of debt, it's manageable. Very, very manageable. ROIC, oh my lordy.
Yeah.
Is that why your eyebrows went up when I was looking at you? Guys, this is a huge ROIC. Damn. This is the highest I think I've ever seen.
Yeah.
Wow. Margins, 81% versus 81% for the last two companies. Bottom line of 20 to 23%. PE and price to free cash flow. Okay. If they have a lot of growth potential, could work out there. Let's see what the 8 pillars are here. Okay. Look at this. And they're buying back shares. Why are you guys buying back shares?
Why are you?
Why are you buying back shares? You guys are small. You guys are, well, I'm not saying I was. Okay, so price to sales ratio, 10.6. Mo, can you look at the Qualys, what the price to sales ratio was on Qualys?
Sure.
And then also Palantir. Yes. So guys, price to sales is a great way to compare companies within an industry together because certain industries are going to have certain price to sales. Car industry, 0.5 to 1. Software is going to be 8 to 20. Depends on how much growth level there is. What you got there?
Palantir's 30.7,
which is high,
and Qualys is 8.17.
Okay, so from a price to sales ratio, Qualys seemed the best. And also look at it, which one of the lowest price to free cash flow was Qualys. So you're starting to see some ways of, it's a good way, especially as a company is growing and spending a lot of money on growth and might be hurting their free cash flow and net income. Look at that price to sales ratio as a way of comparing companies. Let's see what the analysts are saying. A lot of analysts covering this company. Wow. 208 a share going to 355. Some good double-digit growth there. And then revenue, also double-digit.
Yeah.
I mean, this is pretty solid. Pretty solid. Let's go to our stock analyzer tool. FTNT. We've done this company end of last year. Yeah. All right, so my revenue growth might be okay. 6, 10, and 14%.
I had the same numbers. So.
Okay. Profit margin, 15, 20, 25. Okay. Free cash flow, 27, 32, 37. PE, I did 13, 16, 19. And I did a desired return. I got to go back to put in my 9. Why did I do 13, 16, 19? I should probably do higher, 15, 18, 21. Because it's got a high ROIC. Deserves a premium for that. Mo, what do you think?
I like it. I think they're reasonable numbers to start out with.
Yeah. Okay.
Let's see what it is.
All right, guys. So I've got a low price of 20 to 37, a high price of 80 to 120, middle price of 42 to 67. Okay. I have my watch list of 40. Guys, I'm going to change that. 60? I'm going to change it to 60. Not to mean I'm going to buy it at 60, but then I'm going to start doing more research on it, go into the community and talk to people about it, and then sell puts to buy it at lower prices. If you want to see the 18 stocks that I currently own in my portfolio, watch our next video. Thank you for your time.